gentlemen, thank you for standing by. I am Gaily, your Chorus Call operator. Welcome and thank you for joining the Cenergy Holdings conference call and live webcast to present and discuss the first quarter 2024 financial results. At this time, I would like to turn the conference over to Ms. Zairi Sofia, Chief Investor Relations Officer. Ms. Zairi, you may now proceed.
Good afternoon, everybody. Thank you for joining Cenergy Holdings Q1 2024 financial results. Mr. Benos, the CFO of Cenergy Holdings, will present the financials, and then we will gladly accept any questions you may have. As a final note, kindly take into consideration that today is the second day of the IPO of the sister company of Cenergy Holdings in the Athens Stock Exchange, Noval Property, active in the real estate segment. But now is the time to discuss the energy arm of Viohalco. Thus, I give the floor to Alexandros Benos. Alex, the floor is yours.
Thank you, Sophia. Ladies and gentlemen, thank you for joining us this afternoon for the presentation of the 2024 Q1 financial results of our company. I would like first to apologize for my raspy voice, which is due, of course, to last night's celebrations with my team winning the UEFA Conference League, but I'm sure that Chorus Lines' excellent audio system will clearly compensate for this. Turning to today's agenda, rest assured that the clouds you may see in the opening slide are not at all related to Cenergy's voyage. I would rather say that instead our seas are very calm, like the pictures, and despite the uncertainty in our macro environment, we are keeping a very steady wheel towards value-added products for our customers, strong growth in both segments, and a growing order backlog. So without further ado, let's go to the main slide that gives the group key financial figures. 2024 started strongly as, first of all, revenue increased by 4% year-on-year and reached almost 400 million, 396 to be precise. Operational profitability followed with a much more important increase of 24% year-on-year to 54.4 million, with high margins in both segments. That was due, this difference between a 4% increase in the turnover and a 24% increase in the profitability is due, A, to the steel pipe segment trying to choose the high margin profitable projects and moving away from the capacity filling ones that they had in the past, and two, on the cable segment, going towards higher margins from the projects business unit. I mean that the percentage of the revenue of cables that was due to the projects business unit increased. This, of course, brought with it a higher EBITDA margin for the cable segment. This profitability translated very easily to a higher net profit after tax of 23.6 million. Here the increase is even more important. It goes above 50% the corresponding quarter of 2023. And finally, the backlog stays at the levels of December 2023, around 3.1 billion. As I mentioned a little bit previously, the important lesson learned in this first quarter is that execution, the good execution of the energy products, which shows that quality is always our priority, has led to strong profitability for both segments. The backlog, which remains above 3 billion, allows good planning and profitable choices of tenders for both segments, and this gives the important increase in both adjusted EBITDA or simple EBITDA, as well as net profit after tax. So you have this waterfall, in a sense, from a 4% of turnover to a 54% of net profit after tax. As I said, the that some of you may say is staying rather stable is not really at that level. Can you see the slide right now? Because I was having a problem of showing the slide. So I hope the slide now is visible. So the backlog staying around 3.1 million with a strong potential for further increase during the year is actually taking into account only the projects that were awarded and contracted until the 31st of March. So these projects, of course, include, for the cables segment, the Amprion projects in Germany. That's a very important project for us because it is an onshore, very high voltage, 380 kV land system, and it's the first project that we have with that customer. And for the steel pipe segment, we had the Utsira high frequency welded pipes for the two tie-in system in Norway, which also is a technically demanding project of steel pipes. Again, the timing which shows 3.1 billion is March 31st. Since March 31st until today, there are a number of projects in both segments that add considerably to that backlog, but these have not been contracted at the right time so that they could be included in our backlog for Q1. But I'm sure they will be at the results of the first semester. Following on the plans, the investment plans that both segments are executing, I would like to talk a little bit about the capacity expansion in all our factories, in all our plants. I start first with the major expansion in the submarine factory, which is in Corinth. That will finish by 2024. So the increase in capacity for the subsea, medium, high, and extra high voltage power cables will be operational by Q1 2025 and will contribute to the profitability of the segments. For the Thiva plant, we have started the relocation of low voltage to Eleonas. I remind you, Eleonas is the plant we acquired last year from the now bankrupt Petzetakis company that is close to the Thiva plant and where we would like to create a center of excellence for low voltage power cables. So the relocation of low voltage machinery and production lines to Eleonas has started from Thiva. That leaves some space for future capacity expansion in the medium, high, and extra high land power cables in Thiva. This is an ongoing investment project. This is an ongoing construction. It will finish by the end of 2025. For Eleonas, I already said we have completed the relocation of fiber optics. We are now moving low voltage powers to Eleonas, and we are developing the infrastructure for the new plant to be fully operational in 2024. So that will take some production off Thiva, some space will free up some space in Thiva, and will allow for the capacity expansion of the Thiva medium, high, and extra high voltage land cables. In Thisvi, in CPW, there have been some selective investments in the first quarter. I will mention just a couple of things that we've done. First of all, we have a capacity increase for both the longitudinally and the helicoidal welded pipes, LSO and HSO, by doing improvement and splitting parts of the lines. This will be operational by Q3, Q4 this year. And there has also been a capacity expansion in the coating and cement weight coding of the plant. This is important because it allows us to tender, to bid more aggressively in deep offshore projects where both the coating and the cement external weight coating are important to ensure that the pipes can be put at the bottom of the sea with ease. These improvements will finish by Q1 2025. And we turn now to, I believe, what you're all waiting for. I think the intended manufacturing facility of cables in the USA. What we announced on April 22nd of this year still stands. So we are very close to acquiring a waterfront property at Wagner's Point in Baltimore, in Maryland, of 154,000 square meters. This is important to be a waterfront property because it allows us to have the same vertical integration in the transport of both raw materials that arrive to the intended factory and finished products that leave the factory. Port is extremely important. So it was a sine qua non in our search for the correct land plot to buy. The acquisition, the actual signing, we are very close to that, and it has gone through a long due diligence process. Secondly, as we announced in April, we got the IRA tax credit of USD 58 million. Now, that is an irrevocable tax credit, so it does not depend on any administration decisions. This is a contract between the IRS, so the Internal Revenue Service of the United States, and the company in the US. So it does not depend on any political uncertainty that may come later throughout the year. And additionally, it is transferable, meaning that there is an option of trading this tax credit to other companies through an organized market for such tax credits. Such a market has already been set for other tax credits in the past, given also by the IRS. For the respective IRA tax credits, it's in the process of being set up right now. Third point, as I mentioned in our fiscal year 2023 results, the strategy for the US, our strategy for the US is trying to de-risk this investment. So it's a piecewise strategy, a modular one. I use that word modular. What does that mean? It means that if the final investment decision is taken, the steps will be one by one, first towards a smaller volume of a facility that can produce land cables, and then on to submarine. That allows us, first of all, to control for external factors that may always happen, and secondly, to get into a part of the US markets, which is high profit, I'm talking about the land cables, and with a very good opportunity in the future. I'll come back to that when discussing the outlook. A point that I would like to mention here is that although there is a lot of discussion and a lot of news coming up about the uncertainty in offshore wind developing in the US, this is not true since most offshore wind developers that are active in the United States are rebidding for projects. And I'm not talking only about Ørsted, but also about other players, important players. If the final investment decision is taken by the end of the year, that's when we expect it to be taken, then all the works, the site preparation, and so on can start at the beginning of next year. I still stress that such a final investment decision has not been taken yet by the company. Now, let's see what is the rest of the year holding for us. And I will start with the cable segment. As is noted on this page and also this release, cables continues to be very active in tenders. That gives it the possibility to increase even further its backlog, and it also allows it to complete its capacity expansion investments on time, since it has already sold, quote unquote, it has already sold that capacity in projects that are included in the backlog. At the same time, for products, for cable products, the demand remains strong, and this will be a foundation for a solid long-term growth. I mentioned also in our previous communication that the products business unit of cable still gives the majority of the revenue for the segment. One could say that it gives almost 60% of the turnover of the segment per year. So it is very important for us that the demand in products remains strong because it drives the solid term growth. But if we look a little bit closer now to the developments in the cables market, reading a very recent Bain and Bloomberg market research, it shows that the offshore wind will increase, the demand for offshore wind and therefore for submarine cables is expected to increase threefold by the end of the decade. There are a lot of auctions expected during 2024 in the EU, for example, in Denmark, in Finland, in the Netherlands, in Belgium, in Germany, in the US, New Jersey, Oregon, Maryland, Maine, and so on, but also in Asia and Pacific. So there are right now projects in India, in Taiwan, in Korea, and even in Japan for auctions of offshore plots to develop offshore wind. The demand right now, what the market research shows, is that the demand for export cables, the cables that bring power from the offshore wind farm to shore, is twice the supply which is expected in the next 6 years until 2030. So this is a very strong market. Staying on the cables, you all know, of course, that the Greek market is also extremely promising. ADMIE, the local IPTO, has announced a 10-year plan of investments in interconnections, which is above 4.5 billion euros. And there is also a lot of discussion about the Greece-Egypt interconnection. We are talking about 2,000 kilometers of high voltage DC cables. That will be a very important project in the area and gives also a growing demand for high-tech cables for us. Finally, we are all talking about grid and electrification. What also comes up in the latest market research is the importance of data centers and AI. Both of these technologies are extremely power hungry. It is expected that between 2024 and 2032, the power consumption that these applications will demand will increase total power consumption in the world by between 35 and 45%. This is an 8% per annum growth for the rest of the decade. So what does that mean? It means, as very correctly was noted in, I think 3 days ago, in an open discussion organized by the Greek Industrial Confederation, we need cables for these new requirements of power. And land cables will be very important. Land cables are already a major part of our backlog today, and they offer good margins. So we should not focus only on the water interconnections or the offshore wind farms, but also on grid interconnections, grid extensions, and land cables necessary for the new tech applications, data centers, and so on. This is especially true in the US. The US has very favorable market drivers for onshore. Its grid is aging. Electrification is much more important in the everyday way of life of the American citizen. And data centers are clearly developed there in quicker pace. And they already have capacity constraints, leading to very long delivery times for land cables. At the same time, there are new PPA agreements being discussed on the East Coast, new leases, new auctions coming up in Q3 of the year. So even the offshore market is getting more promising in the US. That's why, going back to our vision about an intended factory in the US, we would like to follow that if we take the decision to invest, to follow that starting from the land cables and then extending to the submarine ones. For the steel pipes now. For the steel pipes, the story is also very positive. There is a growth in gas fuels and in natural gas more specifically. CCS is becoming more important. In the words of the big oil company, CCS is the name of the game, carbon capture and storage. And the backbone of the hydrogen network in Europe is now being designed. What does that mean for CPW? It means that for the rest of the year, CPW will continue playing a tier 1 role with the top international energy companies like Total, Chevron, Eni, and so on. We already have very good relations and important projects with all three of them. It will also allow the company to get into the demanding application, as it already does, for example, deep water, low temperature, sour service, high strain networks. That's where the Corinth Pipeworks has its competitive advantage in its technology. And finally, the increase of demand around the globe will allow us to diversify even more geographically. We mentioned last year that geographical diversification, together with product diversification, was one of the important tools, weapons used from the steel pipes segment to counterbalance the lack of demand that was there in 21 and especially 22. So we got projects in Chile, in Australia, in Argentina, and so on. The next markets which are opening up right now are the Middle East and the Asia Pacific. They are not easy markets, they are difficult markets to penetrate, but they have a high potential. And this is where the steel pipes will focus their attention in the quarters to come. Finally, I close with the financial calendar, which is already known to you. So we have our dividend distribution dates between June 25 and June 27. And then between September 18th and September 19th, we will have the half-yearly results and our conference call on September 19th.